Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the show with us today is a new guest to the program. His name is Chris Berry. He's the president of House Mountain Partners, which is an advisory firm centered on strategic metals. Chris, welcome to the program.
Thanks for having me.
Chris, as you're new to the program, I would love to get a short bio, if you will, your background and how you forayed into the space of commodities and particularly the strategic metals.
Sure. So I'm based in New York, and I've been here for about 20 years and have capital market experience both on the buy side and sell side throughout that time. But about 7 years ago now, I broke away with the goal of setting up what I really wanted to be was an independent research shop. And I wanted to focus on this niche of what I call energy metals. And that's very broadly defined as any metal or mineral used in the generation or storage of energy. So obviously, a lot of those tiny markets that are on the front page of the papers today are what I've chosen to focus on. So obviously lithium, cobalt, graphite, vanadium, rare earths. My sense was that the institutional sort of appetite wasn't there because the markets were too small. But, the opportunity for me was that they weren't understood. And my sense was that, the sort of the demand for these metals going forward into the future was really going to lead the commodity space. And so that was kind of the bet that I made, for lack of a better phrase, 7 years ago. And, it was pretty lonely for for the first 5 years. But obviously over the last, say, 18 to 24 months, things have really picked up. My sense is that from a kind of a macro perspective, no society has grown or sort of vibrant middle class. And one of the ways that you build that is through access to cheap energy. So I really focus on the supply chains around cheap energy metals, or I should say metals that make energy cheap and affordable. And that's really how I came to focus on, like I said before, the lithiums and the cobalts and the graphites of the world.
So today we're going to end up focusing much of our conversation on lithium. And it's worth reinforcing what you just stated, that you were one of the first movers into the space. Obviously, lithium has blossomed over the last couple of years, and as a commodity investor has been one of the only bright spots in an otherwise lackluster market. So let's start with lithium and look towards the future. Do you think that this will continue to be a good place, or is this something that's gotten too much attention and might actually be, call it, overpriced in the market at the moment?
Well, I think that it depends how you look at it. There are clearly some junior mining stocks that have responded positively, shall we say, to the increase in the lithium price. And of course, just for the listeners who aren't aware, price of lithium, battery-grade lithium, has increased by about 150% in the last 18 months. And that has everything to do with the focus on vehicle electrification, and of course, the voracious appetite for lithium coming out of China. So, my sense is that, we've come very far in a relatively short period of time. The price that I'm hearing about for lithium inside China is closer to, say, $20,000 to $25,000 a ton. Okay. Now it's lower outside of China, but broadly speaking, my sense is that the next 18 to 24 months in the lithium space are going to be more of the same. In other words, more of what we've seen over the last 18 months. And that has a lot to do with the fact that, again, now that you've seen not just the major companies like Albemarle, SQM, and FMC really grow and expand, but and become, I guess, attractive investment opportunities. But now you've got a number of, near stage lithium development companies, all of whom have really seen pretty dramatic market cap expansion. So they're now on the radar of a whole new class of investors that what I see in my advisory business is a lot of people are just starting to connect the dots and get their heads around how lithium factors into this whole sort of revolution that we're just in the beginning stages of with respect to mobility and, of course, energy storage. So that's a little bit of a mouthful, but, my sense is that while no tree grows to the sky, as they say in investing, I really see the next 18 to 24 months as a very positive environment for lithium in particular.
Chris, being that you're advising funds and major investors around investing in this space, you must spend considerable time researching and understanding the future moves of the energy market. And there has been a lot of concern about subsidies providing the reason behind much of this EV growth and renewable power. And now with Trump in place in the US, some of those subsidies could subside. Does this trend continue on its own merits? Do you think that EVs and renewable power will take off based on just the price of the energy produced against alternatives?
Yeah, it's certainly heading in that direction. And, the revocation, I guess, if that's the right word, the elimination of subsidies is always a threat. And not just in the United States, but any country, in the world. I mean, there's been a lot of talk about pulling back subsidies in China as well. So it's not just the U.S. I mean, the tax bill here in the U.S. that was just passed, I guess, yesterday or just signed yesterday, kept the EV subsidies in place. And so, that's a positive sign. But I think more broadly, for vehicle electrification, for renewable energy to really work and for it to become sustainable, these technologies are going to have to stand on their own 2 feet, so to speak. And so ultimately, subsidies will be either phased out or pared away. My understanding is that automotive manufacturers in the U.S. Are capped in terms of their subsidies. So after the first 200,000 units are sold, that $7,500 tax credit that was just kept in place is going to go away. And so, one of the reasons why I'm so optimistic about energy metals and the whole sort of shift that we're seeing is the fact that, there's a very powerful economic tailwind in play right now. And that economic tailwind has everything to do with battery technology and the fact that over the last, say, 10 to 15 years, battery prices, and I'm talking about lithium-ion battery prices, which are measured in dollars per kilowatt hour, are continuing to get cheaper, okay? And so you've got solar power that's getting cheaper, wind that's getting cheaper, and of course batteries, which are sort of the natural bridge between renewables and the grid, are all getting cheaper. Now, they're not sort of crashing. I mean, I do like to talk about cost deflation here. Let's say lithium-ion battery prices fall at about, 8 to 10% per year. That's a very positive force, and no subsidy necessarily is going to stop that or halt that. So again, longer term, when you look at some of these macro forces like the fact that technology continues to improve, again, it's just a very, very, I think, positive future for the energy metals used in the battery business.
Chris, let's talk about the 800-pound gorilla in the room, which is China, of course. How does China play into this narrative over the next couple of years?
China is, look, we've all focused on the commodity space for much of our career, and so obviously China has a voracious appetite as a consumer of just about any commodity you can think of. And of course, lithium is increasingly, I guess, rising on that list. I think one of the good things about China is usually when the powers that be over there say they're going to do something, they do it. And so right now, the plan is to have 7 million electric vehicles, or new energy vehicles, as they call them, on Chinese roads by 2025. Now, it's not going to be a linear path, and it's not necessarily going to be easy, but just to put that in perspective with respect to lithium demand. So today, overall lithium demand globally, all right, and it's measured in terms of lithium carbonate equivalent, is at about 200,000 tons. That was a 2016 number. So let's say 215,000 tons today, and that's globally. For China to hit that 7 million EV mark in 2025, that alone would require over 300,000 tons of lithium, okay, lithium carbonate equivalent. So you can see why people are so bullish. You can see why the price has gone up by 150% for battery-grade lithium. And you can also see why many of the offtake agreements that have been signed are emanating, if you will, from China. It's because that's where this supply chain is really growing, and that ultimately not ultimately, but I guess today and ultimately is where EV demand will really center. So, again, a lot of different ways to sort of look at it, but really, if you want to get a sense for how the lithium ion supply chain is going to evolve and where the bulk of vehicle electrification is really going to unfold, it's going to be China, and that, of course, has everything to do with cleaning up the environment and really, I think, leading the world from an R&D tech perspective as well, which is something that doesn't get quite as much press.
Chris, lithium prices are up, and maybe for a commodity investor, seeing the oversized demand for these lithium plays would make one think that these stocks have already witnessed much of their move. But stepping out, what is the interest in this space at this point from more of a global perspective? And talking to the type of investors you're looking at, you probably get a pretty good picture. Is this something that a lot of people are in, or is it something that a lot more investors can move into?
My sense is that a lot more investors can ultimately move into this theme, if you will. Again, keep in mind, before, let's say 18 months ago, really the only investable lithium companies out there would have been Albemarle, SQM, and FMC. Those were what were referred to as the big three. And again, so you've got lithium prices that have increased by 150%, and we know how the junior mining market sort of works. As the commodity price increases, typically this pulls a number of, let's say, near-term lithium development stories up with it. And so now you have, I don't know, I haven't looked in a while, but I'll say, 10 to 12 lithium development stories, all of whom have, market caps of, say, anywhere from $200 million to $1.5 billion. And those are on the radar of, let's just say, institutional investors. Everyone has had a great ride with Albemarle. I mean, the stock's gone from $40 to, say, 130 or something like that. I mean, SQM has gone from $15 to about 60. And a lot of people think there's upside there as well based on the dynamics in the market. But, the real leverage is, of course, in some of the smaller near-term development stories. And those are, in my opinion at least, plays that are not well known and, of course, under invested from an institutional perspective. So they're really on the radar, I think, going forward.
Being that we're approaching the new year here, let's talk about 2018 in particular. What do you see happening in 2018 with both the major lithium producers and then some of the smaller companies in the space?
Yeah, I think the real theme for 2018 is consolidation and perhaps M&A, and whether or not it's juniors combining forces or some of the majors that are getting more aggressive and adding long-term supply. I think that just to focus on the large cap or the mega cap portion of this market, you've got a handful of catalysts that I really think are going to be beneficial, not just to those companies, but the whole space overall. Number one, I think, so FMC, they have had a lithium business for a long time, but it's really only about maybe 11% of their revenues overall. So it's a small part of what is really an agricultural chemicals business. So later in 2018, FMC is going to spin out and probably IPO their lithium business. And I think this is a positive because what it will do is it will give investors of all stripes, of all shapes and sizes, an opportunity to really value a pure play lithium company. I mean, one of the challenges with Albemarle and SQM is you've got potash businesses, you've got performance chemicals businesses. So, a lot of people out there aren't really sure what a pure play lithium story will be worth. So keeping an eye on the FMC spin out of its lithium business is catalyst number one, because that could potentially help a lot of the companies in the space to re-rate. Secondly, my sense is that Albemarle will aggressively make some sort of a move, again, with respect to consolidation. This is a company that has made no bones about wanting to drastically increase its footprint in the lithium space. As of today, or I should say as of the last quarter, they have about $1 billion in cash on their books, and they just sold one of their businesses to W.R. Grace for about another $416 million in cash. So they have plenty of money to basically go out and find, let's just say, near-term or de-risked lithium assets to add to their overall stable. Their goal is to get to about 160,000 tons of production, up from about 80,000 tons today, by 2021. So that's another one to keep an eye on with respect to M&A and consolidation. And then finally, and this is something that's been going on for a while, but SQM down in Chile has been at loggerheads with Corfo. And Corfo basically allows SQM to produce the lithium that they do, about 50,000 tons a year right now. So we think we're close to a resolution in the dispute between these two companies. And if we can get through that, which I think we will relatively soon based on some of the political changes that have taken place in the country, again, this frees up SQM to potentially expand capacity in Chile or go out and look for additional acquisition targets.
Excellent. Well, Chris, once again for our listeners, Chris Berry, president of House Mountain Partners, and for any listeners who want to get more information about Chris or contact him directly, his website is discoveryinvesting.com. Before I let you go, anything else you would like to add to the discussion here for our audience?
No, I think, look, this is a great time to be involved in this space. For those of us that have focused on lithium for the last few years, it seems like it's a little bit old in the tooth, but my sense is that we're in a very early stage of a bull market that's going to go for several more years. So the more due diligence, the more research that your listeners can put into this space, I think the better served they're going to be, because I see a lot of upside from where we are today.
Excellent. Well, Chris, Merry Christmas and Happy New Year's. Thank you for taking the time to talk to us today.
Absolutely. Thank you.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?